So let's just dive right in. So as we are working to emerge from this pandemic, there's a looming elephant in the room as it applies to the mortgage industry and what will happen once the CARES Act ends. A recent CFPB study stated that approximately 11 million families are at risk of losing their housing. 2.1 million of those are homeowners, owing nearly $90 billion in missed payments. We know that the solution is not one size fits all, but what should be happening now in the mortgage industry to prepare for the potential storm that's brewing, as we all can agree that we don't want to see a repeat of the Great Recession?
Look, Rhonda, I do marketing compliance here, and this may be a little bit out of my space, but I think there's a lot of lessons that were learned during the financial crisis, and I think the toolkit from a loss mitigation perspective that mortgage lenders have today is fundamentally different than it was previously. I think the regulators know that. Hopefully the regulators will give us some breathing room, and I'm not talking about breathing room for abusive practices or fraud, but where lenders are trying, to figure out what to do with the portfolio that maybe has some folks who can't pay it off. I'm going to guess they're going to have to work through this, and hopefully they give some breathing room. But at the same token, we got to make sure people stay in their homes to the extent possible.
So, are there things that you feel regulators can do at this particular point? Since I'm not saying we're early on in the game because June is going to be here before you know it, but are there things that you feel that regulators can do to support the mortgage industry in these efforts?
We have the tools, we just need to continue to work together, and communication, I think, is also key with the regulators and industry.
Great, great. So we are approaching 2 months under this new administration, and it's all this buzz, but it's clear that the CFPB is focusing on enforcement and oversight, and a lot of their focus is going to be in the space around racial equity. Seems pretty safe to say that fair lending and ECOA will be aggressively enforced, as we've seen a lot of news articles and updates from the CFPB directly. How do you ensure that equity is occurring within your organization and instances of disparate impact are not occurring?
I mean, I think for loanDepot and any lender, really, the question you really need to ask yourself is, are we treating everybody equally in the application process? Do we have an objective set of standards we're applying regardless of what the rates are? The answer should be yes. You can also, certainly target more minority groups in your advertising efforts. From a marketing perspective, we're cognizant that we have to focus on diversity and make sure that every group in this nation knows that lenders are there to serve their needs. We try to focus on this in our advertising. We, of course, need to continue to hire diversity to reinforce that.
Great. In your opinion, is there an opportunity for regulators and the industry to work together to find better ways to ensure that equity is occurring?
I think awareness, just being a little bit more vocal, both the regulators and the industry, I think that would go a long way to help these efforts.
How do you avoid crossing the line? I know that it's always that you want to do the right thing, but sometimes it's like in the process of trying to overcompensate and make sure you're doing the right thing, sometimes people can get left behind. How do you address those things as from a mortgage company standpoint, especially as far as fair lending is concerned?
I mean, Rhonda, the reality is that certain folks aren't going to qualify for mortgages as much as other people, and so you have to target and turn up that portion of the minority group that doesn't qualify to a certain degree in order to try to balance it from an equity standpoint. And that's challenging, right? This doesn't only rest on the mortgage industry, in my opinion. We have to be objective. As a lender, we have to be objective, and fair lending rules do exist for a reason, for good reason. And obviously we follow them and believe in them, and we must try to use our advertising and marketing efforts to qualify individuals in every market. So, like I mentioned earlier, so they know we're here to serve their needs. We have to speak out more broadly in our society. And I mean, really, to me, it comes down to marketing and hiring practices.
So let's move on into one of the other hot areas that the CFPB has been speaking on. And it's recently been reported that the CFPB has received a record number of consumer complaints in 2020. It was close to double the numbers reported in the previous year. So with credit reporting being the biggest complaint issue, what should compliance departments be doing in order to ensure that their controls are in place that will allow for an effective, compliant response, tracking, monitoring, and when necessary, coaching on compliance-related complaint issues?
Yeah, complaints, in my opinion, has been a focus area for regulators always, right? And the answer is the same as it's always been. You've got to be looking at your data, right? Your data has been observed by many, many people, and that's not necessarily a bad thing. It's a good opportunity to figure out what's going on in your company and what shouldn't be going on. Many times complaints resolve because really there's nothing to them, and that's great, but that's just confirming and verifying that your process is working the way it should be. And sometimes a true complaint is also a gift because you did screw something up and you now have an opportunity to fix it and really show the regulators that you're working towards fixing it. At the end of the day, the regulators and your compliance team should be working towards the same thing, which is a fully compliant process that gives consumers a great experience. And you should constantly be mining that data to make sure that is the case. Having a robust compliance process in reviewing complaints in your data is crucial to this.
Truly it is. So I know you've got an extensive background in TCPA compliance. So let's talk a little bit about some of the things that are happening in the space of TCPA and how those things can affect some of the lenders out here. And do you have any thoughts of, with this current administration, how things might shape up, and will TCPA become a hot topic again?
I think it's going to continue to remain a hot topic. Fortunately and unfortunately for some folks. The two big things right now, Rhonda, are the Facebook appeal, which is just everything. And, for so long, the definition of an auto dialer has been unclear and expanded and contracted and then expanded again. It's just a complete mess out there. And finally, we're going to have an answer. The industry is cautiously optimistic that this is going to go well for us. And what this is going to mean is that automated technology, not talking about random fire technology, but technology that can efficiently and accurately dial our customers, is going to be allowed again. And that's wonderful news. It's going to be allowed for also contacting cell phones, unless of course there's a number on the DNC. You got to be very careful still. Which brings me to my second point. The biggest development in the last 6 months has been the evolution of the requirements of lenders to be specifically named in their online disclosures. Two huge cases addressing this in the context of DNC just came out in the last few months, and it's going to survive Facebook. Even if Facebook goes our way, you're going to have to worry about this bad trend in the law. You have to be looking at your disclosures and make sure that it has all 9 pieces of the required express written requirements that the FCC has laid out for us, and it is in a form that courts will accept on the website. Those are two critical things, but the new critical change is that lenders must be specifically named in order for calls to be made.
Wow. Definitely a lot going on there. What kind of compliance challenges do you think are important for companies to know who utilize social media to attract their leads?
If you're using social media, there's a net of rules, as we know. First of all, you have to worry about UDAP. You have to make sure that the FTC stuff is always in the back of your head. You can't trick people, no baiting and switching, right? If you're selling, I don't know, a circular saw, then you better have a picture of a circular saw in your banner ad, right? You have to be honest with what you're trying to sell and what you're trying to pitch. And that's just one issue. Issue 2 is, now you have to worry about CCPA and data protection issues. That data you have to hold on to. You have to preserve it in the right way. Are you a person that's going to be viewed as a holder of that data versus a processor versus an aggregator? I don't know, but you better make sure you know. And finally, of course, there's always TCP issues. You want to make sure that your landing site and that your social media ads are driving to has the right level of consent. And as you know, Rhonda, PerformLine offers, a great tool to be able to monitor and track what folks are putting out there in social media to make sure that you're compliant with all the consumer protection laws out there. Social media advertising just isn't what it once was. It seems to be more watered down, and the people aren't getting the juice that they want out of it. It's just not the same, and it's still a critical part to our marketing efforts and part of our arsenal, but People are already looking at what's next, right? So you have to have some controls in place, some monitoring in place, and you have to be aware of the changes and keep up with the regulatory guidance. And like I mentioned, the tools like the tools that Performline has to offer are great for these things.
Well, thank you. We appreciate that we're able to help folks. That's definitely our goal for sure. Well, this has been such a wonderful conversation, and I think that the audience hopefully has a lot of takeaways, and I look forward to talking to you all again in the near future.